Traditional weighting schemes for an index run the gamut from float market capitalization to equal weighting. Yield weighting an index is use of a stock's dividend yield to weight the constituents. The idea is stocks paying a higher dividend have a larger weight in the index. However, there are ways to customize a yield-weighted index. Hello, I'm Michael Mell, Senior Director of Custom Indices at S&P Dow Jones Indices. Joining me today to explore a custom yield weighting methodology where a cap of 25% on master limited partnerships, or MLPs for short, are key to the approach is Todd Sunderland, Partner and Head of Risk Management and Quant Strategies at Cushing Asset Management. Thanks a lot for coming all the way from Dallas, Texas, Todd.
Thanks for having me.
Great. So I want to let our viewers know that we've been working together for 10 years. The Cushing 30 Index was launched about a decade ago, so that's a pretty big milestone. In line with that, I want everyone to understand who Cushing Asset Management is. Can you tell us about your firm's experience in the energy and transportation space?
Certainly. Jerry Swank founded the firm in 2003 focusing on MLPs. Since then, we have significant experience in energy, transportation, materials, and have about $3.6 billion under management currently.
Okay, great. So diving into the indices, I'd like to explore Cushing's custom approach to yield weighting. Can you tell me a little bit and our viewers about the methodology behind the Cushing energy supply chain, transportation, and utility custom indices?
Sounds good, sounds good. Let's first take a step back and talk about the sourcing of the constituents for the indices. For the energy index, for example, it's sourced from the S&P 500 energy GIC sector and the Cushing 30 MLP index, what you mentioned earlier, the 2009 launch.
Right.
We then take the constituents of the S&P 500 GIC sector, energy GIC sector, yield weight those. We cap it at 6%, minimum of 1% per constituent, and that is 76% of the index, the energy index, the Cushing Energy Index. From the MLP side, there are 12 MLPs, 2% each, that's the 24, so 76, 24 gets you the 100%.
Right.
The Cushing 30 is yield ranked. Constituents 6 through 17 are chosen for inclusion on that equal weighted basis. We're avoiding 1 through 5 as the higher yielding MLPs might be an indicator of risk, so we're avoiding that process. But we do the exact same framework for the utility index, the transportation index, and the energy supply chain index. The difference, the tweak on the energy supply chain index is that we use energy and materials and MLPs. Energy is 38%, materials is 38%, and MLPs are 24% to provide that entire supply chain aspect.
So it's still 24% even for that index on the MLPs.
It is.
Uniform approach. So let me ask the question, why do this? In other words, what is the functional purpose of this custom yield approach, custom yield weighting approach to the indices?
Sure. And the approach for the yield weighting is very akin to a market cap weighting. We're just using yield instead.
Okay.
And we're capping it. So it should be a very familiar construct, not too rough there. The benefit, or what we're trying to accomplish.
Yeah, what's the purpose?
Exactly. It was we're by capping it, we're lowering the concentration. We're trying to keep the concentration under control, but increase yield across the board.
Okay.
From 76% from, say, energy or transportation or utilities, we're increasing the yield from that group, and then adding 24% of MLPs is also increasing the yield, but we're trying to do it in a balanced way.
Okay, great. Thank you for that. So in line, I guess I want to know, why really even focus on MLPs as part of the custom index? Why have them in here to begin with?
Yeah, sure. And it goes back to that yield framework as well, but also, does it make sense? So energy and MLPs make sense. Utilities, MLPs, transportation, that's what MLPs do, and then energy supply chain, they're integral to that entire supply chain. And that's the fundamental reason why MLPs are included. And so we're bringing that blend to have a broader approach to the energy, utility, transportation, and energy supply chain by including the MLPs.
So it's a better representation, if you will, of the industry in addition to the yield play.
That's the goal. Yeah, exactly.
Okay, great. So given that these are yielding indices, I mean, that's very clear. Isn't a rising rate environment a challenge?
It can be. And that discussion itself could be its own video, let's say. But the framework of the rate sensitivity stems from the original index. For example, what do you think about energy, or what do you think about utilities, or what do you think about transportation? Should have a very similar construct as far as the rate sensitivity. Probably less so for energy, probably more so for utilities. Nonetheless, any rate extreme move is going to be a negative for risk assets.
Okay.
MLPs traditionally perform pretty well in a rising rate environment because of the same reason rates are are going up, or MLPs or businesses are improving as well. But again, a shock or an extreme move for rates are going to be negative.
So I'd like to close our segment by asking you why you decided to have the stocks for the Cushing Energy Supply, Transportation, and Utility Custom Indices come from the Dow Jones Transportation Average, the S&P 500 Energy, S&P 500 Materials, and S&P 500 Utility Sector Indices. Why draw from these indices?
Certainly. So the part of it's a risk framework, quite frankly. The S&P Energy, Utility, and materials sector, then the Dow Jones Transportation are known, well-respected, and also large cap generally indices, right? And so while we're yield weighting these constituents, we still have the defensive nature of the large cap. So even though we're yield weighting, you can have the inference of a higher risk framework, you're already using a large cap index as your source.
It's almost like a quality screen to some extent.
A quality screen to start off with, exactly. And then on top of that, it's S&P Dow Jones indices.
Right.
Very trustworthy, very understandable, and transparent.
Great. I very much appreciate that, Todd. Thank you for coming today.
Thank you.
To learn more about custom indexing, visit us at www.spdji.com/custom indices.